So this video is gonna be for all of you guys who are watching, and maybe you are still in your school, you are still working 9 to 5, but you know that you are meant for something bigger and you want to make trading your full-time career. So this strategy over here helped me to drop out of school, quit my 9 to 5, and pretty much chase my dreams. So in today's video, I'm gonna break it down from A to Z. But before we start, I just want to show you something to show that I'm not better than any of you watching this, because this was literally me like 2 years ago. Look at me, all BMW. I was working as a care mechanic. You can look at these guys. So just look at this. So I'm gonna post more pictures. I'm not gonna bother you too much, but I just want to show you. This was like, look at these guys. This is broke as fuck, as you can see. This picture is telling you more than 100 words, so you know that I'm not better than any of you watching this. So let's get started. So first I'm gonna present you this so even a 5-year-old child can understand, and I call this triple SSS model because we have sweep, shift, and setup phase. I'm gonna explain literally all of those phases. So this is gonna be the first one, sweep, then we have the shift over here, and then setup is gonna present over here, and you are gonna target the highs. This is of course bullish example, and this is bearish example, but it's all the same thing. So step number 1 is going to be identify the key liquidity levels. And why I say identify the key liquidity levels? Because whenever you have, let's say this is bullish price action over here, so market is creating higher highs, higher lows, higher highs, and higher lows. So every single low over here, if we are of course bullish, means that this is going to be meaningful low, and this is where the stop losses are resting. So stop losses are resting probably here, then on another move in the price leg here, and market is literally gonna do this. So market is gonna come here, stop out every single trader like who is early bar, and then we are gonna have an entry here targeting highs, and you're gonna see that over here. So liquidity is resting on these lows, bullish fair value gap delivery, and we are gonna find our entry over here. And one more time, same goes with the bearish example. After the sweep phase, it's time for liquidity grab and inversion gap, which is shift phase over here. This is happening always, I mean not always, but 90% of the time it's gonna happen in the fair value gap, which means if you are bullish, it's gonna happen in the bullish fair value gap, and if you are bearish, it's gonna happen in the bearish fair value gap, which means if we are overall bullish, we are actually expecting from market to respect the bullish gaps, and if we are bearish, we are looking to see how market is going to respect the bearish gap. It's very, very logical, and we are always following the hard time frame flow of the market. So once market saves the liquidity, once market taps into this fair value gap, we are going to have an entry. Just give me a second to remove this. We are going to have an entry. As you can see, it's going to be always inversion of the fair value gap on the lower time frame, which means if you are entering, if you do your analysis on 1 hour, you're going to enter maybe on 5 minutes or 1 minute. If you are doing your analysis on daily chart, you can enter based on the 1 hour time frame. It doesn't matter, it's up to you. So this is going to be entry time frame over here. And guys, you can see this is your liquidity sweep, and let's say this is over here bullish fair value gap delivery. And now once you scale to the lower time frame, you're going to have first bearish fair value gap, of course, because if you are looking to see market going to the upside, we need to see that market is actually going to disrespect the bearish gaps, and vice versa. So bearish example over here, we have liquidity sweep. Let's say this is going to be bearish fair value gap delivery, and after that we are going to have a bullish fair value gap, and we are going to see inversion, and we are going to enter here targeting the lows. This is the easiest, like this is literally the easiest entry model and easiest strategy on planet Earth. But just watch till the end because I'm gonna show you some live examples. And then we have the final step, step number 3, which is gonna be enter your position. Simple as that. Like after the sweep and delivery and setup, we're gonna have setup phase. Place your stop loss, take profit, stop loss on the last high or low, which I already explained, and take profit on the opposite liquidity. It works on higher time frame, lower time frame, I don't even know. It just works on everything. Every single pair, every single time frame, it really works on everything. You can backtest it. I'm gonna backtest it after the presentation, so don't worry. So guys, you can see liquidity sweep, inversion of the fair value gap, take profit, stop loss. You can always target either 1-to-1 risk to reward, something like this, or you can always target, I don't know, 1 to 2, 1 to 3. It all depends on your win rate. My win rate is extremely high. My win rate is around like 80 to 90%, so I like to target usually 1 to 1. But maybe if your win rate is a little bit lower, let's say your win rate is 60%, you can feel free to target a 1 to 3 because you're gonna be extremely profitable day trader. So let's put this all together one more time. Triple S, sweep, shift, setup, bullish example, bearish example. You can see higher high, higher low, higher high, sweep of liquidity, delivery from bullish fair gap, boom, lower time frame, entry. Same goes with the bearish example, lower low, lower high, lower low, bearish example over here, lower time frame entry, targeting the lows. Simple as that. Now we're gonna go on the trading view and see some real chart explanations. Just before we guys go into the real examples, I just want to make something clear. So this is my TradeZella verified checker. Trade of it connected over here. You can see month of November, month of October. Of course, I'm not perfect. I'm losing. It's part of the game. Like I told you, 80% win rate almost. This is month of September. I did very well in this month. August, break-even day, losing day. You can see I'm human. I'm making mistakes like all of you guys, and sometimes I'm gonna lose, but they're just part of the process. But you can see that across 4 months, not even 4 months, actually 3 months and a half, I made more than 6 figures in total profits using this model, which is for me very good. So this over here is gonna be Nasdaq because I backtested Nasdaq a lot. I backtested like 1 million years. I did all the hard job, guys, so you don't need to do that. You can just replicate this model without, I mean, you still need to backtest, but you don't need to backtest a million years like I did. So guys, first I'm gonna replay this so you can see everything in the real time. Actually not in the real time because we are in replay, but still it's gonna be real time. So guys, first of all, let's determine the bias over here. On the hard time frame, what can you spot over here? Higher highs, higher lows, higher highs, higher lows, higher highs, which means market is breaking structure to the upside and it's leaving liquidity here, liquidity here, liquidity here, and liquidity here, which means what the market is gonna do, I'm just gonna replay, stay here, I'm gonna just replay. So you can see every single person, every single trader who entered the position, maybe let's say here, and put their stop loss underneath the low, targeting some sort of highs, let's say these highs over here, I'm gonna mark them. So for every single one of those guys, so maybe they place their trade here, maybe they place their trade here, or maybe even here, they're gonna get stopped out. Why? Because all the liquidity is resting here, all of the orders are resting here, and if we play the price, you can see that they perfectly got stopped out over here. So what are we gonna do instead? We're gonna wait to see the sweep of that, and then we're gonna have delivery. Bullish fair value gap. This is new week opening gap. This is literally like fair value gap on steroids. We're gonna check here, and you can see that market is still respecting this bullish new week opening gap. Sweep of liquidity here, like this, and we have inversion of the gap on the hard time frame. Even maybe you can place a trade here. You can see that we inversed this gap. So this is, guys, of course this is going to be hard time frame, but I'm going to show you also on the lower time frame, so don't worry. And let's say you want to target these highs. Let's see if this is going to play it out. Beautiful. Maybe you can even do this. If you missed this trade, you have one more fair value gap over here that got inversed, and you enter the market here with stop loss, I don't know, underneath here, because stop loss always goes underneath the inversions or underneath the last candle like this. And let's say I want to target these highs. If we play the price, I'm just gonna wait for a little bit. You can see beautifully it played out. So it doesn't matter if you miss the first move, still you can take this over here and target these highs because we are following the logic behind the market. So what I'm gonna do right now, even if you maybe miss this trade on the 1 hour, you can see that we inversed this in the beginning of this move, this 4-hour gap over here. Let's say stop loss underneath, targeting these highs or maybe even these highs. So let's see. Okay, it edged the TP over here, but it will be break even or take profit over here. It depends, like if you want to target 1-to-1, go break even, or you want to target these highs, but it played out. So what I'm gonna do right now, I'm gonna scale to the lower time frame immediately after this sweep, and we are gonna search for entry on the minutes. So I'm not gonna lie to you, I'm gonna be 100% transparent, and to be honest, right here after the sweep, I wouldn't find an entry, guys, because this is like when we set this liquidity, it was around, I think it was around 4 a.m. in the morning Eastern time. That is not the time when I trade. I usually like to trade from 9:30. As you can see, this is 9:30 Eastern time. That is when New York Stock Exchange opens. So to be honest, guys, I would never take a trade here, but you can clearly see that probably some sort of trades here played out, but you can see that market is just chopping around, so we're gonna skip that. You can clearly see 9:30 open over here. Let's keep the price. Here it is. This is your 9:30 open. You can see on the hard time frame we left this bullish fair value gap, and market pretty much is showing you the bullish trend because this is very bullish momentum to the upside. So we're gonna scale right now to the lower time frame and search for any invasion of the fair value gaps on 1, 2 and 3 minutes. So on 3 minutes we have this one. On 2 minutes we need to align every single one of those. We have this over here which is aligned with the 3 minutes, and 1 minute of course we have one more fair value gap on 1 minute, which means 3 minute is the most efficient one and it's the cleanest one. So if we play the price, we are just gonna wait for the invasion. Boom, beautiful. Here we go. Oh my god, I am press this. Okay, here we go. So we are gonna enter the trade here. Stop loss, let's say underneath this gap or underneath the last candle, and let's say you're gonna target 1 to 2, some sort of meaningful drawn liquidity, which can be over here, or 1 to 1. It all depends on what type of trader you are. So if you want to have higher win rate and be quick in and out, you can easily target 1 to 1 like this. So if we play the price, boom, it played out very nicely. But like I said, if you really believe in, let's say, this over here drawn liquidity, you can easily target that because it won't get hit. So you can target this, and that's why I like to target a little bit lower. So always maximum like 1 to 2. You can clearly see that market is gonna retrace, so probably market right now is gonna move to the upside. Yeah, market is gonna right now move to the upside, but you can also catch a trade somewhere here as well. But I don't like to do that because one trade per day keeps 9 to 5 away. That's what I like to say, and this over here is all I need to be extremely profitable a trader. But you can see that if you missed, this one played out as well. So that's gonna be it, guys. I'm not gonna bother you too much. Backtest this shit because it really works. It's the easiest model on the planet Earth, I can guarantee you that. And if you really master this, it's not even a question of if you are gonna be profitable, it's just a matter of when. So that's gonna be it for this video, and I'm gonna see you in another one. Peace.